Hi, it's Mark at Workplace Mortgage Clinics, and today I'm talking to anybody that's looking at buying their first home in the next 2 to 3 years. So it might be very soon, it might be in 6 months, might be in a year, but hopefully this would really help you start to understand the process. By definition, if you're buying for the first time, you'll have never done it before, and actually it can be really daunting. So just by understanding the process, understanding the various different people involved in the process as well, and maybe just demystifying a bit of the jargon that we find that gets thrown about in financial services and many other industries, to be fair. So where to start? I would highly recommend, as a mortgage broker myself, I would highly recommend finding a good mortgage broker that you feel that you can work with, that you trust, to help guide, support and advise you throughout the whole process. Okay, all too often I've seen people that have by default just gone to their bank and obtained a mortgage through their bank, and whilst it's not necessarily the wrong thing to do, you're limiting yourself to one lender as opposed to a mortgage broker that can look at the whole of the market, can look at all of the lenders, all of the banks, building societies and specialist lenders across the market, not only to get you the best rates for your circumstances, but also they can look at different criteria, because every lender will look at your income, your outgoings in a ever so slightly different way. Okay, so it's really broadening your options. Understanding the process is really key as well, and certainly to keep your stress levels down, if you understand what the process is, who the various people are, what stage you're at, and that's something that if you've got a good mortgage broker, they will help you through that as well. Plan. It's something where actually having a plan in place, I can't stress this enough, from as early as possible in the process helps you to understand where you're trying to get to, and it then helps you put things in place to ensure that you achieve those. Again, a mortgage broker will help you achieve that, and I mean that whether you're looking to buy very soon or in the next year, 2 years, for example. And actually, if you can understand and start to appreciate all of these points, then everything, from my experience, and I've been in the industry for 20 years now, everything will start to fall into place. And when starting to think about buying for the first time, it can be so daunting. I mean, in life in general, there's so much jargon out there, there's so much terminology that we're unfamiliar with, and by definition you've never bought before as you're buying for the first time, and actually thinking about where do I even start with this. I mean, you can see just some of the terms and bits of terminology that we use in this industry there. And actually it can be daunting if you don't understand it, and if you're not helped through it. So again, a good mortgage broker will help guide you through and explain what needs explaining, and really help talk you through your options. And so as you can see, I've broken down the house buying process into a number of stages, and so the first stage is planning and saving. So the planning and saving stage is so crucial. Like all things in life, actually, if you've got a plan in place, it really helps you to understand where you're trying to get to, and it helps you set out how you're going to get there, and ensures that you can get there in the most efficient and quickest way. So the first part of your plan is going to be how much you're going to need up front. Okay, so the most obvious part, and your mortgage broker will help you with all of these, is your deposit. Okay, so it may be that you saved the deposit, or it may be you're in the process of saving the deposit. It may also be, if you're lucky enough to have close family that will provide you with some or all of the deposit. It's been more and more needed in the last 20 years or so, where house prices have increased significantly, that family have had to help out providing deposits. So most lenders are absolutely fine with that. Okay, but in addition to the deposit, there are also some costs involved in buying property, and whilst your mortgage broker will talk you through and give you a closer or a more specific idea of those costs involved based on your circumstances and requirements, I'm going to give you a bit of an overview as to the different costs you'll come across in the process. So stamp duty is a tax that you would pay when you're buying a property in the UK. Okay, not when you're selling, it's only when you're buying. And there are certain exemptions as it stands right now. That said, rules do change, so it would be worth checking at that point in time when you're looking to buy. So as it stands right now, if you're a first-time buyer, or if there's two of you buying together, if you're both first-time buyers, never owned a property before anywhere in the world, you'd be classed as a first-time buyer. And if you're buying a property up to the value of £300,000, you wouldn't pay stamp duty at the moment. Okay. Other costs, legal fees. So the terminology for the legal work involved in buying and selling property is known as conveyancing. So you would need a solicitor or a conveyancer, different terminology for the same thing. You'd have to pay or appoint one to do the legal work for you. Many mortgage brokers, including myself, have good relationships and understandings with solicitors that would be able to help with this. Okay. Valuation costs. So when obtaining a mortgage, you're borrowing potentially hundreds of thousands of pounds against your property. So lenders naturally will want to really give themselves the peace of mind that the property is in adequate condition for them to lend this money. So that's part of the rationale behind their requirement that they must have a survey done. But also they want to know that the value of the property is at more or less what you're paying for it. Okay, now it's your choice whether you wanted to upgrade or organise a separate survey that's more in depth. So typically if you're looking at an older property, or if you've got questions or concerns around the condition of the property, you might want to have something a bit more in depth before you then commit to buying a property. So that would be your choice. I would certainly recommend giving it a lot of thought. Arrangement fees. So sometimes, again, part of the mortgage broker role is to look at all of the lenders available and all of the different rates. There potentially could be the best rate for you may come with an arrangement fee. Some lenders will allow you to add this to the loan. Some will insist that you pay it up front. Again, that's something you can have in a more detailed conversation with your broker. Some brokers, or many brokers, will charge a mortgage broker fee as well, and that covers the advice, guidance and support that they provide you with literally throughout the whole process. Okay, it's not just about obtaining the mortgage offer, it's about supporting you throughout and holding your hand throughout, which we've already said. And it's also wise to have a bit of a contingency fund as well. So your moving costs, for example, hiring a van to move any of your things, even if you haven't got so many. Even the most sort of modern property, you might want to change the carpet, you might want to paint the walls or do some sort of decoration, which everything costs money. And also it's worth having a bit of a safety net just in case unexpected costs come to light. Okay, so that's how much you're going to need, and thinking about things that you're going to need up front. So how much can you afford to borrow? So we've talked about how much you're going to put into the property. We're now talking about how much the bank or the lenders are going to provide you with, and what sort of mortgage you can obtain. And so all mortgage lenders work ever so slightly differently, and again that's why it's so great to look at the whole market through a mortgage broker rather than just one bank, for example. And they will all do, and are all required to do, affordability calculations. So that will involve looking at your income. So your income isn't just, if you're employed, for example, isn't just your basic salary. It could be overtime, bonus, commission. You might have an area weighting such as a London weighting. You could have car allowance, shift allowance, all sorts of different. And as I said, every lender looks at things ever so slightly differently on that score. And also your outgoings. So your credit commitments, such as if you've got a loan, student loan, credit cards, car finance, or if you've got dependents where you might have childcare costs, you might have maintenance costs, all those sort of fixed costs will need to be factored in to determine how much a lender will prepared to lend you based on your circumstances. Okay, and they will need to see some documentation, as your mortgage broker will as well. So that typically might be looking at 3 payslips and your latest P60 if you're employed. If you're self-employed, it will typically be looking at your last 2 or 3 years accounts or your tax returns, and also some bank statements as well, because if you think about it, your bank statements tell an awful lot about how you operate your finances, probably more than your payslips actually, in terms of of things. So that will be taken into account. Lenders will also look at your credit file. So just to explain, if you're not aware, so in the UK we tend to have 3 different credit reference agencies: Experian, Equifax and TransUnion. And whenever you take out credit, or any credit you've got, if you've got a bank account, if you've got even see utility companies will provide these companies, mobile phone contracts, will provide these 3 credit reference agencies with information about your conduct of your accounts. So it might be the balance of your accounts, the monthly payments, it might be if you miss payments. So there's a hell of a lot of data that sits on your credit file. If you've missed payments, or if you've defaulted on an agreement or gone as far as a county court judgment, even things like your address history and if you're on the voters roll. So it's really important. You might be surprised by about the information that's held about you, but it's so important to make sure everything is up to date and everything is paid on time, and that you present yourself in the best possible way. I hear a lot about credit scores, and I would say don't worry too much. These different credit reference agencies might provide you with a credit score, but it's a score based on their internal score, which doesn't really mean that much. Lenders, so every lender's got their own different way of scoring you, if you like. So if we were to do an application with any lender, they will pull information from one or some or all of these different credit reference agencies, and they would then build it into their own internal score. Okay, so that's why I say don't worry too much about your Experian score or your Equifax score. It's more about making sure your credit file is really well, neatly presented, and you paint yourself in the best possible light there. Okay, and also how much can you borrow? It's great knowing that a lender will lend you a certain amount, but it's also looking at actually what is affordable on a monthly basis for you as well. And so it's looking at that and helping to understand what your budget will be. There will also be, if you've lived at home, for example, and never had any bills, you'll also have to factor in things such as council tax, energy bills. You'll also, if you're taking out a mortgage, particularly if you've got financial dependents, or if you're taking out a mortgage together, putting some sort of protection in place. So if anything goes wrong, that actually you've got plans in place to ensure that the impact is minimised. So once we understand how much we're going to need, how much deposit we'll need, and how much that we can actually borrow from the lenders, then is the time to start to think about what we can actually get. So that might be, or probably is a combination of looking at where. So is there a particular location you're looking at? Is there a particular type of property? For example, might it be a flat? Might it be a semi-detached, terraced house, detached house, and number of bedrooms, for example. But equally, it might also mean utilising some of the special schemes. So, for example, the government scheme, shared ownership, or Help to Buy scheme, all of which are great schemes at helping particularly first-time buyers onto the housing market. So lots to think about, and once we start to understand this, now it starts to become clearer as to what's achievable, and we can start seriously thinking about where we're going to buy and start looking at properties. So we've done the planning and saving stage, and so the next stage, depending on the timescales as to when you're actually looking at buying. So once you're at the stage where you've saved what you need to save and you're now going to start looking at properties, the first thing to do at that point, so whether you're looking straight away, you may go straight into the agreement in principle stage. If you're looking to buy next year, for example, you may go away, save, and ensure and keep in touch and make sure that everything is going to plan. But once you're ready to start looking seriously at properties, then an agreement in principle or a decision in principle would be wise. And that's something that your mortgage broker can obtain from a lender. And so it involves them providing the lender with some basic information about your circumstances, about your requirements. So it would also include how much money that you were looking to borrow, what your deposit was. And the lender would obtain your information from your credit file, and they would do an internal assessment as to whether they were happy, so agreeing in principle to lend you that money. Most lenders will then provide you or your broker with an agreement in principle certificate, which they would provide you with, and that gives you the reassurance that you've got the mean, or you can obtain the mortgage that you need. And it also gives the selling agent and also the seller themselves reassurance when you get to the stage where you want to put an offer in on the property, that you're not a time waster and that you've got the means with which to buy that property. Okay. So the next stage, and at that stage you're ready to go and look for houses. So whether that be through Rightmove, Zoopla, do your online sort of checks and then start going and viewing properties in person. And so you would then go and have a look at properties, have a good look round. Once you find the one, and you'd be surprised, so often I speak with clients and they look at a few properties and all of a sudden they walk in and they just find the one that is for them. They get that feeling. You're in a position where actually you can provide them or submit an offer for that property. Okay, you would tend to do that through the estate agent themselves, and because you've already got the agreement in principle certificate, you've got that agreement there that gives you the confidence of doing it. So there may be some negotiation on the price, but once you reach an agreement for the price of that property, then the estate agent, as part of their due diligence, will want to check that you've got the means of buying the property. So they may ask, or they tend to ask, for the agreement in principle certificate. Many will also ask for your proof of deposit, so your savings account statement, just to show that you've got both parts and you can afford that property. Once your offer is accepted and they've done their due diligence, they will then take the property off the market. So they're no longer showing anybody around that property, and that property is now effectively reserved for you. Okay, you're not legally obliged to buy the property till much further down the line, until exchange. Okay, but we'll come to that shortly. So the next stage for you, there will be a couple of points. Okay, the mortgage application. So you will go back to your mortgage broker, who would provide a mortgage application to the most appropriate lender. Now, depending on the amount of time that had elapsed, they may ask for some up-to-date documents, so maybe bank statements, pay slips, probably not accounts, but if you're self-employed, because nothing would have changed depending on timescales. They will have found the most appropriate lender at that point, which may be different from the original research. They will submit a mortgage application. Okay. With the mortgage application, it will be more details about yourselves that will be provided to the lender. It will be your documentation, so your pay slips, bank statements, for example, and they would also instruct a survey to be done, as you can see. So the property survey, we spoke earlier about the types of survey that would be required. So it would usually take up to a couple of weeks, 2 to 3 weeks, I would say on average with me. The lender will assess your application, which would also involve looking at your documents, and once the survey comes back, if they're happy that actually it's valued at the correct amount and that there's nothing seriously wrong with the property and it's suitable, then they will then provide the mortgage offer. Okay, the mortgage offer stage is the bit where the lender is saying, yeah, we've completed all our checks, the mortgage is sitting and waiting, and as soon as we get the nod from your solicitor, we're then ready to release the funds and your purchase can be completed. Okay, so that tends to be the fairly quick bit. As I say, in my experience, it tends to be between 2 and 3 weeks. It can take a bit longer, can take a bit less. It really depends. But while this is going on, the legal work would have started. So at mortgage application stage, you will have decided which solicitor or conveyancer that you will use, and they will start to do the necessary checks, liaising with the seller's solicitor to organise and ask any questions. And the legal process does take a little bit longer, depending on the amount of toing and froing, and depending if you're involved in a chain, so if there's other properties relying upon sort of further purchases down the chain. I would say on average, from the point that you have your offer accepted and you do your mortgage application, it tends to take about 3 months until the point where you get your keys. Okay, so as the legal work gets done, your mortgage broker will continue to speak with you, usually on a weekly basis, possibly fortnightly basis as we get further down the line. It really depends how they work and what's happening. And as we get towards the end of the process, you'll hear 2 terms mentioned: exchange, which is exchange of contracts. That is the point where you are then legally obliged to go through and buy the property. Okay. Completion is the point where money changes hands, so your mortgage lender will release the funds to your solicitor. The solicitor will collect your deposit as well, and they will then send the funds across to the seller's solicitor and complete the purchase. And at that point you get the keys and you can move in, and everything is then done. And that's when the fun starts, and you can start to move in and get everything as you'd want it. So hopefully that's given you a good idea of the house buying process and the various parts and people involved along the way. And I hope it's shown that actually if you break the different parts down, then it needn't be so daunting, and actually it should be such a positive experience, and I'm really passionate about that, having helped many first-time buyers over the years, that it should be a positive experience. It shouldn't be stressful, it shouldn't be daunting. And so my top tips would be, first things first, find a good whole of market broker who will be able to help you look at all of your options. Have a plan and really plan ahead, because the sooner you can do that, then the sooner you understand where you're trying to get to and what you've got to do to do it, and to get there. Ask as many questions as possible. So I always say to my clients, there are no silly questions, and I know it's a bit of a cliche, but there really aren't. I try to ensure that we don't use jargon and that we get things as simple as possible, but sometimes you may forget, or you're just not quite clear about something. And just by asking, I'm available all the time and will always answer questions for clients and make sure, because if you don't understand it, it's not a silly question. So important to understand it. Another one, be organised with your finances and paperwork. So part of the planning process that we talked through was about your credit file. Actually being organised with your credit file, making sure, for example, all credit cards, get them on direct debit so it pays your minimum payment, because just a little bit of sloppiness or forgetfulness and you've got a couple of late credit card payments can make the difference between you being able to get the mortgage you wanted or not. Or it might mean that you end up having to go with a different lender to the most optimal lender for your situation. Okay, but equally as well, things like pay slips, your bank statements, just keep them nice and organised. So when you get asked for them from your mortgage broker, from the lender, it's easy. They're in a file nice and neatly. Everything's online these days as well, so hopefully that makes it even easier. You can just provide it quickly, rather than delaying the process by a week because you can't find your pay slip, for example. And stay calm. Again, emphasising that it should be a really positive experience, and actually having your broker keeping you up to speed with things and the progress of things. There's no need to get stressed and to worry. And if you are, speak to your broker and just understand where you're up to. So hopefully that has been useful for you. If you wanted to get in touch with me to discuss any part of anything that we've talked about today, or if you are in the position yourselves where you might be looking to buy within the next year, 2, 3 years, and just want to talk about your own individual circumstances, please get in touch. Say I'm available by email, by phone, or come on to our website and have a look. So thanks ever so much for your time today.